Okay, so if I ask you, if I have the DAP to buy Facebook, Meta, or Google, or Alphabet, what do you think is the best choice for my portfolio?
Yeah, so it's choice one to one, no?
Yeah, if I have space for one more stock, what should I buy? And of course, that is a really hard advice. But no, we're gonna look at it from a different perspective.
We're gonna compare those companies.
Yeah.
They came with figures. We did it in the past also, but it's now an interesting moment, and we're gonna look at those two companies from a technical perspective and from a fundamental perspective, and then we come with the conclusions.
Correct.
First one, you want to start with the week?
Yes.
Small things.
A lot of big things that eventually caused the market to go up quite significantly. The FOMC came out again. I had ECB last week, FOMC this week, and the interest rate hike was 0.75%, which was all in all, I think more or less what was expected. You had people that were expecting 1%. There were people that were expecting 0.5%. I was at the 0.5% camp. You were also reading in the afternoon. You said I also read about 1%. At the end, 0.75%. The market exploded. I dare to say so, because if the Nasdaq goes up 4%, that is really positive. And why was that? Mainly because Powell made us feel, as better said, that he expects no recession, and he also left the door open to be more mild with future rate hikes. So the next hike is in September. We will have another rate hike, but he said if the market is giving us space enough, it will not be maybe that aggressive as what we have been doing now. So that obviously was by the market more important than having the fact that they did 0.75 than 0.5. Yeah. So that was with regards to the FOMC. The euro, dollar. Euro is getting a little bit stronger again. So I think that is also for people in Europe having to buy stuff in the US, maybe positive. What else? We had the Japanese yen finally getting a little bit stronger again. So in all, we could say the dollar is getting weak, slightly weaker this week compared to the other currencies. Of course, it had a really big jump in the first 6 months of this year. So that is also
yes, and a lot of figures. Logical. Of course, we only can discuss a few.
Yeah.
What we did. There was a stock split 2 weeks ago.
Yes.
Which company was it?
We had it about Alphabet,
Google. And then we said what we discussed is how does the stock response, how does the share price respond after a stock split? And then we looked at the 2 weeks, 1 month, 3 months, and 6 months.
Yeah.
And we came to the conclusion, or we found some interesting data. And remember his name? I don't remember his name. Rocky White, I think it was. I think it's possible, yeah. I don't remember his name. And then he came to the conclusion, in this kind of stock split, that you should wait 2 weeks and you can buy it after 2 weeks compared to the S&P 500. Okay, let's see what happened. 2 weeks ago, the 14th of July, the share price of the Alphabet stock or the Google stock was 110. Yeah. Now it's 114, so it's almost 4% up. Of course, if you bought it 2 weeks ago, you had a profit of 4%, and it's more than the interest rates wherever. No, not wherever in the euro and in the US zone. But the S&P jumped in the same time from 3,750 to around 4,100, and that's a jump of more than 9%. Yeah. So again, the theory said no, you can better the first 2 weeks buy the S&P 500 compared to the company that did the stock split, and again, in practice, it doubled the revenues.
So Rocky was right.
Rocky was right.
Yeah, you could have better bought the S&P.
Yeah, 9% versus.
Obviously, this is not taking into consideration any other financial climatological circumstances, like FOMC meetings and stuff like that. But of course, the facts are the facts.
Yeah. So today we want to look at compare those two shares because they are similar shares, no?
Yeah. Yeah, they're both tech companies, I think. Yeah, they work with technology, specific technology. It's both related to the internet, of course. Google was the first search engine. Facebook was one of the largest social media platforms. and is one of the largest social media platforms nowadays. So
both have the main revenues drivers
from
are advertisements from online sales. We're going to talk about that later.
Yeah.
Let's first do one step back and look at the charts.
Yes,
of those two
you asked me
companies.
to look at take care of the technical part, which I happily did. I have a screen in front of me, so sometimes I look down because you can't read up from. I don't have a chart in my mind, as you can understand. So what we can see here that it's the chart of about 4 years. So it includes 2018, 2019, 20, the COVID crash, and then the recovery after that, and also the first 6 months of this year. So what can we see? I draw a lot of lines, and it seems like to be very difficult to understand, but it's actually not. It's based on the Fibonacci retracement, which is based on physics. If you want to know more about it, I'm not going to talk about what exactly Fibonacci is. You just go into Google and you read a lot about it.
We have trainings about it.
You have also trainings about it.
Reach out to us. Yeah. We have online trainings about those topics.
Yeah, you can learn from it. But what you see is that there are different lines. So I took the retracement, and if you do the course, you know what it means, from the highest point until the lowest point, the dip in March 2020, and then you get all different sorts of levels, and those levels, everybody's looking at those. It's not by coincidence that the market or a stock at a certain price is having all the time difficulty to get through that specific level, or when it falls down, it hits back that level. The support and resistance levels are many times in the chart visible by these Fibonacci retracements. And what can we see is that if we look at Facebook, it has dropped almost 100% from the highest level. The retracement is almost completely done. So normally what that means is that the cycle is finished, so the stock technically, like I'm saying, this is not really predicting anything. We can only see what there is on the screen at the moment, but it has corrected completely back to the level of March 2020. If we compare that to Google, or in this case Alphabet, you can see it has only dropped. It is at the resistance support level, where this moment is $114 more or less, what Casper just told us, which is 38%. So it hasn't gone down that much. So from a technical perspective, you can see that, obviously Facebook has been hit harder. What can we see more? We see a larger line, that's the 200-day moving average. Both stocks are definitely in a negative trend, so the trend is downwards, so that is clear. The trend is going down. Obviously with Facebook, that already started in the first quarter of 2022, and with Google we can see that negative trend only just started from the second quarter this year. So all in all, from a buying perspective, if you look at the relative strength index to finish off with, that basically gives you an indication whether the stock is overbought or oversold. They're both trading at the mid-range of 50, so there you cannot really see a clear indication. If you would change the parameter of the chart from a daily to a weekly, then obviously you will see there's less reference points, then Facebook will be more oversold than, in this case, Alphabet. So all in all, I think basing myself on the Fibonacci retracement, the cycle, the retracement of Facebook, or Meta in this case, is completed, which could be an indication that it will bounce back up. And the first price where we will go to is, in this case, then 23% above the current levels, which is around 200. Not what I'm predicting here, just what the chart is telling me.
That's interesting.
Yeah.
So a lot of things are similar.
Yeah. We put the chart in. We leave the chart in for quite a while in the screen, I think, so people can have a clear understanding.
Okay, so you have a slight preference for Meta /
yes.
Facebook.
Technically,
from a technical
perspective, yes.
Slight, eh?
Yeah, slight. Yeah.
Okay, let's look at a little bit at the fundamentals. And there's also it's similar. It are similar companies. Also, if you see the increasement of the costs of labor is similar over the last periods, last 2 quarters. But there are some differences. And I found some fun facts about Facebook. I found 25 fun facts, and I have them here on my iPad. The first one I saw is that his first site, what he wanted to, later it was called Facebook, but he called it Face Mesh.
Yeah.
And that was a platform, and he was still at the university, where you could pick students that were hotter than the other ones. And that was not allowed by the Harvard administrators. So that was his first idea. And if you look at some data, women are using Facebook more than men. A lot of the older generation is growing more interested in Facebook. If you look at
I think it's
2015, and that's also one of the underlying drivers where Facebook is struggling with. In 2015, 71% of the American teens were on Facebook. Now it's 51%. So from 70.
But they also own Instagram, no?
Yeah.
So there's a big shift there.
Yeah.
So it's always difficult. You would think if Instagram is growing, then just change the model of. But they both own it, so then also it's not really necessary.
No. Asia Pacific, 30%, 38% of all the users. Only half of the Facebook users speak English. That's a fun fact, I think.
Fun fact, yeah.
98% of the people use it on a mobile phone. And if you look at, this is from an American side coming, if you look at the Conservatives or the Democrats, it's the same. They use it in the same way. And they're most active 8 in the morning, 10 p.m. And 88% of them, they say, I'm using it to stay in contact with my family.
Okay.
And the average people,
excuse.
and the average people, they are on Facebook for a little bit less than 1 hour, 58 minutes.
A day?
A day.
That's quite long, eh? I mean, if you think I think that's substantial.
It's an hour per day average. Okay, there were some fun facts about Facebook. Yeah, that's a lot. And of course that's for Google a little bit different. You are not that long on Google. We can compare it to YouTube.
Well, Google is more ad hoc.
Yeah,
I use Google all the time without even thinking.
Yeah,
about it.
only of course YouTube is part of Google.
Yeah.
And you can compare that a little bit, but it's not that important for. Let's look at the figures.
Yes.
So they came both with figures. Alphabet, so Google, you know that. And the revenues were up 13%, 13%. The profit was almost flat, and that was because they had higher costs, like almost all companies, like the cost of labor, but also they have Google acquisition costs, and that was up 11.7%. That was an important one that was highlighted. If you look at the revenues, so the revenues were 13% up, and they were around 70 billion. 56 billion is coming out of advertisement, 7.3 is only coming out YouTube, and 6.3 is coming out the cloud. And the cloud is interesting because the cloud is a growing market and their revenues grew 35% in the last quarter. And of course it's in the figures, how is it compared to the estimations, but these are the facts. And the facts is that the cloud, it's almost in revenues, revenue stream almost the same revenue income as YouTube. And of course we all know the cloud industry is growing. So I think that they have there something that will grow every quarter, so that will increase the revenues. And if they control their costs a little bit more, then also the profit will increase.
Definitely.
Yeah. They didn't give an outlook for next quarter, and but their competitor, one of the competitors, Meta, did it. The first Q2 figures of Meta, we're talking about year to year, so compared to the quarterly figures, same quarter, the Q2 of 2021. They were the same, or not the same, or a little bit less, 1% less. And they had the revenues of 28.8 billion. But in their forecast, they said, Zuckerberg said it on the call with the analysts, they expect next quarter a range of revenues between 26 and 28, so lower.
Lower, yeah.
And one of the problems where they're struggling is TikTok, the competitor TikTok from China. They have around 1 billion of revenue stream, and they try, you mentioned Instagram, and they try to do it with Instagram, also with videos, but there is no revenue stream behind it yet.
With TikTok?
No, with the Reels from Instagram. So maybe they have
because you have to have advertising.
Yeah, so maybe they have some master plan that they first want to get people addicted to the Reels from Instagram, and then come within a master plan to introduce also a revenue model. And they, of course, they have so much experience with, so will it. On the other hand, it's called Meta. Why? Because they said, okay, Meta, that's our vision, and
metaverse.
Metaverse. That's the future of the digital world.
Yeah.
But all their investments, what they did in Meta, and they have of course the best 3 classes. They increased the price, by the way, this week with $100 per thing. And they made a loss last quarter of 2.8 billion. And they expect even less revenues from that Meta strategy in next quarter than they had in last quarter. So they have problems. I think if you look at, they match the almost also the revenues compared to the analysts. So it didn't look that's a big problem.
Bad. No, but yeah. No,
but the share responded not good. The Alphabet share went up and the Meta share went down. But if you look the underlying, I think in the short future, the cloud is only increasing, and compare that to Meta, they have problems with the TikTok. They have both the same problem with the inflation, so that's not something.
No, but it's a completely different ballgame.
And the investments in Meta, it's not bringing the revenues and the profits. So if that works on the long run, it's going to be a fantastic one. But if you look on the short run, if you want to compare those two, I think from a fundamental perspective, Alphabet is more interesting.
Yeah. Oh, I think that's a fair conclusion. So
we don't help our investors.
No, or you have a preference for fundamental analysis or technical analysis. Yeah. But I think, to wrap this up, you should always do your own homework and feel what you also think about it. We give you the tools, and
we give you some information, food for thought.
It's for you to decide what you do with it. And if you have any questions, as Casper said, we have courses that really learn you how to analyze what we are doing. We give you that in 15 minutes, but obviously there's much more to it. So have a look on that as well.
Thank you for watching.
Yeah. See you next week.
Thumbs up.
Thank you.
And see you next time. Bye bye.